Hello and welcome to another episode of the monthly market report. My name is Justin Nielsen. I'm going to be your host today. I'm filling in for Allie while she's on her maternity leave. So while that might be a little different, we have the same old character coming to us as he does every month to kind of give you your bullish shot in the arm when appropriate. It's Jim Roppel. He, of course, is a hedge fund manager, a longtime follower of Bill O'Neill, the founder of Investors Business Daily, creator of the Roppel Report. Welcome back to the show, Jim. How you doing?
The one thing you got about right in my description is old.
Old. Oh, yeah. Well, hey, you know what? Older and wiser, right? So you've been around the block a few times, and you remember the 90's. So many people are talking about, gosh, this is so reminiscent of the 90's, and you did such a great job on one of your presentations for the Founders Club where you were walking through, hey, during the 90's, you had all of this infrastructure built out that had to happen first. It wasn't about the internet companies. It was the network. It was all of these, the picks and shovels, for like the gold rush. You didn't know who was going to be the winner, but you knew who was going to be servicing a lot of these companies. And it feels like a lot of that is happening right now. Those companies that you were talking about a couple of years ago, was it last year?
Yes.
Yeah, it was last year. Those companies that you're talking about last year, those have been the winners of 2025. So, yeah, I mean, well, let's pull up a chart. Let's start there because I know you put a chart in front of Jim and then pull a string and things go wild. Here's the Nasdaq Composite. We've had a couple pullbacks, but gosh, this market just doesn't want to stay down. What do you think?
I mean, look at that horrible month of September. I mean, it's historically a train wreck.
Yeah, the seasonality of September. I'm gonna go to the monthly chart real quick, so we can see how bad it got. Yeah, up 1.24. No, that's October. Up 5.6% for September. So yeah, so much for and I'm gonna one up you there, Jim. How about sell in May and go away? How did that work out this time around?
Well, that's a major signal. I mean, the market is screaming at us. And let me put it in I'll just tell you this right now. I am expecting the greatest markets for price appreciation that the world's ever seen. And it's because we are endeavoring into the traction phase of the greatest technology the world's ever seen. Why wouldn't you expect the market to be better, higher levels of extension, higher valuations, greater earnings growth than we've ever seen? Why wouldn't you expect that? If I said, oh, Justin, we're going to have a terrible, not a recession, we're going to have a depression, immediately people go, oh, the market's going to go down 70%. But when you say the greatest innovation humans have ever seen is getting traction, and they're like, oh, I don't believe it. Oh, I don't think it's going to, get higher levels of extension. People have a hard time believing the upside. They all can believe the downside.
Right.
But, there's so many fund managers who are underperforming, underinvested, waiting for the dip, 7.74 trillion in money market on the sidelines, doubters, and that we were up 5% in September, the worst month seasonally of the year. That market is screaming at us. It's not gently tapping you on the shoulder. It's like a bullhorn yelling in your face.
with a slap too. Now, I guess on the other side of things, a lot of people are looking at some of the moves that have been, some of these have just gone vertical, it seems like. And so with that, they're kind of like, well, how much more do you expect? I mean, when you've had 100% moves, so many of them, and triple digit moves already, can you really expect it to do another, triple gain, triple percent gainer?
Why wouldn't you? If you study TMLs, they go up 500 to 2,000% in a cycle. Like, why can't that happen again when we're endeavoring into the greatest technology ever seen? I mean, every CPU, not every, but most CPUs are going to have to be replaced by GPUs.
Right.
The demand, every laptop, phone.
And for those that don't know, so CPU is a computer processing unit versus central, versus a graphics processing unit. And why are graphics processing units the big thing right now?
because they're tailored for AI. I mean, they were initially for gaming, but they are, and you know how you made the analogy when I did that presentation about the correlation between the build out of the internet and then the monetization.
Yeah.
And AI networking was integral to that. Both. It's amazing. Like Sienna was a monster in the internet run, and now it's come to life. It's not my favorite name, but it is very good. There's a lot better names. I'm sure we'll get into some of them later, but the similarities are, it's not identical, but it rhymes. It more than rhymes. It rhymes extremely closely. And the moves, you said, well, it's already up, any Western Digital or all these, Corning Glass. That's the beginning. Now, again, I strongly suspect that just like the internet build out, there will be rolling cycles of build out in names in those moments that are punctuated by bear phases. I'm not saying bear markets are eliminated. I'm just saying that the frenzied fever we're going to get into is going to be parallel to or greater than the internet. And I mean, for people were having 200% and 300% years regularly back then. Okay. I mean, build PMs. I mean, I had many 200-300% years back then. Then the markets cooled off. We had a Titan bear market from the .com bubble, and then the whole thing built out again. I'm saying we're going to see I think the greatest bull markets we've ever seen in history, but I'm not saying that cycles of pullbacks, intermediate term corrections are gone. They are definitely here.
And I guess that's the hardest part, right? Because if you're looking at some of these, and let's just take a Western Digital, and this is WDC. This has had, I mean, again, we look at the weekly chart. This has gone from 30 back in April to over 120. So a 4x move in months here, and you've got to expect, that, I mean, a pullback could be around the corner here. We might be in it right now. And those aren't going to be fun, but you're saying that there could be opportunities with these.
I'm saying something like Western Digital has had a flagpole, a flag-esque move, and then a breakout over 80 again.
Right.
Unlike SanDisk, it just looks like a flagpole to me. Okay, and here's another thing. I think, could that have been a climax? It seems way too early for me. But we'll let the flag build out tell us. And I strongly suggest this could go if a flag develops versus a downside reversal. But when I say to you, the GPU clusters are being networked to ramp up processing power. And you're going to have most CPUs are going to be replaced by GPUs in most devices. This cycle is going to take years just to build the infrastructure, let alone monetize and implement the solutions. I mean, I don't know, man. I am calmly raging bullish, and I think a lot of things need to be hedged right now. Like I would be hedged at Western Digital. I'd be hedged SanDisk, but I wouldn't hedge the index. I would not use QQQ. You have Apple, looks great. Microsoft is just coming up again.
We just added that to Swing Trader today.
I mean, look at that beautiful digestion around the 50. It did break it, but it never got too deeply below. It hugged it, and now
11% depth for this flat base.
It's shallow, very shallow. Google. Now those four, I think, are easily going to counter Meta, and Netflix is caught up in the little problem they have. But I would not short an index against Credo. Okay, I would hedge, and I wouldn't hedge Credo either. It's already had a good digestion. Maybe it has a little more. And this isn't as beautiful as, like, say, Palantir's digestion about a month ago. If you go day by day on the daily, look at the wild upside reversals and accumulation, just day after day. closing high, closing up on volume. I mean, it's remarkable. It's much better than Microsoft's.
Mm-hmm.
But
Yeah.
we had a little bit of a Gandhi Mother Teresa Day on Palantir on Friday.
Yeah, I was just going to say, let's talk a little bit about some of the news that can come out, and I mean, it really feels like it's either up 20% or down 20% for some of these news items. So Palantir, there were some questions on some of their software, some vulnerabilities. Palantir, after the close on Friday, kind of answered those allegations, and it was up significantly today, up 3.7%. Still not recovering from back to Friday's high, but certainly doesn't look like this is getting worse at the moment.
I really don't pay attention to much news. I just
Mm-hmm.
said it was a bad break and it was on news. And then I said, I'm going to let it go for a week. Look, Mother Teresa walked into a 7-Eleven one day and she had a bad attitude and she yelled because they put the wrong flavor Slurpee in the cup. I mean, a woman of perfect virtue has bad days. Gandhi had a bad day. He wasn't always perfect. And leading stocks have Gandhi, Mother Teresa, they have bad days, but they're not bad people. They're not bad stocks.
Mm-hmm.
They just get rocked. And that shakes out people who don't understand exactly the implications for their technology and the total addressable market. And I read that it's a $99.5 million contract. That's peanuts for them. Okay.
Mm-hmm.
And there was also a product co-produced with another operation. So I'm not really sure about the tainted story that Palantir is. I just don't believe it. But again, I'll let the market tell me. And this name, I think, is probably it's the dynamic liquid leader. NVIDIA is the king of the jungle. It's, as my old boss who hired me 30, 40 years ago said, as General Motors goes, so goes the whole market. And today's General Motors is NVIDIA. It is not as dynamic by any stretch as a lot of these other names, but it is the king. And it's broken out. It's limped out. AMD's news this morning.
I was going to say, I'm not sure if you're aware that David Hatman Chung has a bet with David Ryan. David Ryan came out and said, I think AMD is going to outpace NVIDIA. This was, when was it? Back in June. And so they have a hamburger bet on this. Someone's going to owe someone a hamburger. And today it looks like David Ryan was getting that with a 23% move. I mean, well off its highs, but still 23% move in AMD. I mean, at one point, I think it was, almost again, let's go to the weekly chart. I mean, this has basically doubled, since crossing above its 200-day moving average line.
Is it an Oracle day, or is this a breakaway gap?
Mm-hmm.
Look at Oracle.
Yeah. I was just going to say, so, Oracle, of course, had a wonderful gap up, and look, it's filled in a good portion of that, but it hasn't, it's to its 21-day moving average line. I certainly wouldn't say that this is broken necessarily.
I wouldn't say it at all. I just think it's a very large company. And when you have a 5-year backlog that's going to run your earnings over 20% a year, this company's born again. And it's just further evidence of this AI massive build out. And I don't even use the 21-day. Like, I think it's such a fast moving MA. If you're going to pay attention to that, you're going to get whipped out of all the you're not going to sit for 4 to 6 beat and raise quarters if the 21-day is your marker.
Yeah, absolutely.
If that's your guardrail, you're going to have a lot of short-term taxes.
Now, on the news side, let's talk about AppLovin today. So at the very end of the day, this came out with news. There's an SEC probe about how they're using their data, and I'm just going to go to the 5-minute chart, and you can see, hey, guess where that news came out? I'll give you one guess, right? So at the very end of the day, and within minutes, this was down 10%, then got worse as the day went on. And I think it's even, down another 5% in after hours after being down 14% for the day. Now, granted, again, like a lot of things, this was getting very extended. Last week, it had a downside, a reversal, closed well off its lows. What do you do on a day like today?
You handle days like today before they happen. When you get max level of extension for the recent run, you hedge. And you hedge 30, 40, 50, 60, 65% of your position. So this would have been handled beforehand. But a day like today, if you don't have monster cushion, you had to let stock go. You had to. If you didn't have a big, massive cushion. I don't know the implications. I didn't even know this happened until I got on this with you and the little, what do you call the backstage? What do we have there?
Yeah, backstage. Yeah. So
hair and makeup. We're in there,
right.
They're doing hair and makeup, and you told me this happened, and a guy was texting me, Jim, what do I do? I didn't even know it happened, and I'll tell you why. I think AppLovin had 2 climax runs. Normally, once a stock has a climax run, it just only 2.7% of past leaders recover. Okay, I just was like, I think it's wrecked and it's over, and I was wrong. It broke out again at 4.
Are you talking about like here?
Yes.
Like a climactic move here? Okay.
Yes. And I just wasn't in it because I like the odds. When something is a 2.7% probability of reoccurring, I'm going to generally I'll go on to the next thing.
Right.
I mean,
and that means you're going to miss some opportunities. You know, again, there's a sacrifice here. You can't have it both ways, right? You can't say, okay, I'm going to go with the odds and then, complain when that small fraction wins. It's like, hey, that's what the odds are. It wasn't 100% either way. You're playing the odds.
A lot of time for education in the Roppel Report, I show flawed bases. And what I say is, it doesn't mean it can't work.
Right.
It's just the odds are that it's not that it won't, or it'll underperform, or there's something wrong with it. And look at all this other merchandise that is so much better.
Yeah.
I'm an odds player.
And on the flip side, you can have the most delicious, perfect base with the best fundamentals, checks off all the boxes, and the darn thing doesn't work. And then again, okay, there was this, percentage of sometimes they don't work, and you just happen to get that percentage.
I think a lot of people have become super complacent because I say that of my buys in a normal market, which is nothing like a normal market, I'm wrong 7 out of 10, 6.5 out of 10 purchases. My default is every stock I buy is going to be a loser, but people have been conditioned to everything works and they work spectacularly. So they've, I think, become very loose with risk management. And we are definitive. I think the odds are high that we have a pullback down to or below the 50-day before the year's out. And we only have 13 weeks till New Year's Eve. Okay, so I believe strongly that's coming. And I just don't think people are quite ready for it.
Right. So again, it bears repeating that while your long-term outlook is wildly bullish, it doesn't mean there aren't going to be challenges along the way. And that's really important to remember. You mentioned Sienna and GLW, which I do have a position in GLW Corning. This is one I played along with Bill back in 2000, so I have a soft spot for it. But another one that is in the fiber optics space is AAOI, and this one just broke out today. So what do you think of these stocks that are? I mean, there's so many stocks that have been running for a while, and then you have something like Applied Optoelectronics that's just breaking out today. Is it like? And I mean, this was a 20% move today. Is it like, well, what took you so long? Why are you so late to the party? Or how do you view something like this?
Okay. This is Cowboy approved only. It does not get the good housekeeping seal of approval. It has no earnings. Now, the sales growth is triple digit, and it was a nice breakout. But, I remember I was looking at LinkedIn. I was reading my notes from Bill as I was sleeping, going to bed last night. And I said, hey, what do you think of LinkedIn? He's like, LinkedIn? He goes, has no earnings. Why wouldn't you buy Facebook? This was 20 years, 15 years.
Yeah, like 2012.
Why screw around with a non-95 or higher comp name? You want to eliminate all your downside blowups, or not? That's not true. You want to reduce the probability of eliminating downside blowups, stick with names that have profits.
Mm-hmm.
Okay, is this good for a cowboy who wants to buy 1,000 and take it up 5 points and blow it out? Sure, great. But this is not a wait for 4 to 6 beat and raise quarter stock.
Mm-hmm. Now,
what's
to
the
that
market
same end, the market cap on this one is looks like $2 billion. Yeah.
How much of this is Contra Fund going to get to buy?
Right. Yeah.
Zero.
I'm going to go to our
they are in.
no IBD mutual fund index ownership. So yeah.
People, since Bill's passed, I try to honor his traditions and his method dutifully. And Bill would just say, no earnings, I'm not in. No institutional sponsorship, I'm not in. No prior uptrend, I'm not in. Selectivity is the key to this game. There's a lot of stocks out there. They form bases, they break out. But I think people are loosely interpreting the original Can Slim.
Mm-hmm.
I mean, Bill and I would talk on the phone. He had to call me 5 times a year by contract. And then he would call me out of the blue, just, whatever. And he would show me what he had and I would show him what I had. And every one of them, his stocks mostly had triple-digit sales and earnings.
Right. Yeah.
He was always in, not AAOI. He was in the leader. Can we pull up ANET, please?
Absolutely.
Okay, let's review the metrics. What's pre-tax margin, after-tax margin, return on equity, sales growth, earnings growth, relative strength, up to down volume? I mean, earnings estimates. It's got to be 99 comp, right?
99 composite rating, 34% ROE, EPS growth rate of 42%. That's annualized with an earnings stability of 7. 7. The lower number here, it goes from 1 to 99. The lower number is the more stable. And you see that with this earnings line. It just is like, quarter after quarter after quarter. And again, 42%. I mean, just imagine if you were increasing your salary 42% each year. It's just phenomenal. Here's the quarterly as well. Double digit, as far as the eye can see. And these are not small numbers. It's not like this is going from 1 cent earnings to 2 cents. This is some very solid numbers on the revenue side as well. And the estimates are no slouch either. So.
And where did the management come from? Some company few people might have heard of called Cisco. The executives at A-Lab or Arista said Cisco is old and dusty and they're not keeping up with cutting edge technology. And they formed ANET.
And, just as a reminder, Cisco was the top dog with its 75,000% move from its IPO in 1990 to the peak in 2000. But it still hasn't gotten back to the peak of 82 from March of 2000. Meanwhile, ANET came onto the picture, and I mean, look at that. We're just, hey, Cisco, we're going to grab your market share and eat your lunch.
So you said that Cisco went up 72,000?
Yeah, 75,000% roughly.
Okay.
Yeah, split adjusted. And
with a bigger innovation than the internet, that we might have another stock that could do half as well. Why would that be a stretch? Why don't people see that?
Well, okay. So one thing I want to bring up to you, this is a question that a lot of people have been, throwing out there to a lot of us, because look, 2021, 2000, the IPO market was crazy, right? I mean, everyone was coming out with an IPO. They were slapping .com at the end of their name and thinking that was a business model. It was all about getting eyeballs. That, earnings don't matter. That's like old school thinking. Now 2021, we had all these SPACs come out, special purpose acquisition companies. And then 2022, it was like the faucet turned off. There was just nothing in terms of the IPO market. And certainly one of the things that feels like is happening with the IPOs now is that they're coming out much more mature. You just had Klarna, for instance, that just came out, was, widely anticipated. It's already a $29 billion company. This is not something that is coming out and like, oh, sometimes I remember Michael Kors, when Michael Kors came out,
Yeah.
and it was like a secondary. Every time that stock was up, a secondary, because Michael Kors was divesting his ownership in the company. So, Cisco, the big thing there was IPO. We're taking advantage of an environment in which we can raise money, grow our business, and that's what the IPO was for. Do you feel like we've gotten away from that? That private equity is providing that, let's grow our business this way, and now the IPO is for the owners to divest and pay off the people that were in at the beginning.
Government regulation has forced, pushed companies into going public much later. But to kind of go backwards, in the Founders Club report I did on internet versus AI, 274 companies went public in 99. 274. We've had like 30 this year.
Yeah.
Okay. We're so darn early in this thing. I think you're right, for sure. Companies are coming out more mature because of private equity.
Yeah. Okay. Well, so let's talk a little bit about one of the areas that has been highly interesting to you. The cryptocurrency. It's funny, we were kind of talking about it, and personally, I do have a position in both IBIT and Ethereum, those ETFs. I'm playing the chart. Right. I look at this chart and I'm like, well, that's something I can trade off of. That's something I can manage my risk with. But there is certainly, it seems like, an ecosystem build out. We're starting to see more use cases, the stable coin, everything like that. Can you talk to us a little bit about what's happening in cryptocurrency? What's driving this? I mean, before it was, we've got the halving, we've got the adoption. Certainly that's still the case, where a lot of people are talking about the cryptocurrencies getting the stamp of approval from some of these, old stalwart companies that were at first like, this is not real, this is nothing, this is fake. And now you've got the JP Morgans that are, involved here. So what's happening with cryptocurrency now, and why should we care, and how can we profit potentially?
So stablecoin market cap, I think it's up about 80% in the last 5 months, the total amount of coins, because people in third world countries are unbanked largely. And off their phone, they now can have a stable currency, the US dollar, as opposed to some, rupee, or that's the Indian, whatever, some, flimsy currency. And the adoption is exploding. And most stable coins run on Ethereum. Okay. That is the first killer app. It is the stable coins are to the blockchain what email was to the internet. It's the first killer app. And there's many, many, many more in decentralized finance, many more. But Bitcoin, you think there's a correlation between the government printing money and not being able to balance their budget, and the budget, the closing of the government, and Bitcoin moving? It's that by the closing of the government says these guys can't control it. And that's why part of the reason why you read the Roppel Report, dude.
I did.
Oh, you did.
Yes. Hey, what do you think I'm using as my bullets?
Most of this stuff are talking about was covered in last night's Roppel Report, which was just posted. And if you'd like to subscribe with a discount, you can use the code IBD and get the bundle. And all this is in there in detail. But you don't have Justin and I talking to you about it. Well, you do with me on Wednesdays.
On Wednesdays, yes. I was going to correct you there. Your daughter does a great job of keeping you riled in, and asking questions. And yeah, you do. And you do the question and answer grab bag. you really tackle a lot of questions from the subscribers. So that's really awesome.
But today you are Sarah trying to keep me on the guardrail.
Right.
What's more bullish than an all-time new high in a inflation-resistant currency? There's only 21 million, of which most have already been mined.
Mhm.
And there's not one Bitcoin for every millionaire in the world. Okay. And Michael Saylor owns, look, I just see Bitcoin, as gold has been ripping.
Right.
It's just
That's another thing, which is just crazy, right? That, all these growth names skyrocketing and gold is like right there with them, and the gold miners, of course.
It's the leading sector this year.
Mm-hmm.
But as gold rises, Bitcoin's a better gold. It's just a bigger market for Bitcoin to eat up. I think I don't know if it's going to happen, but I see no reason why Bitcoin won't have a larger market cap than gold. Why wouldn't Bitcoin eat the whole thing? It's just better.
Mm-hmm. Yeah. Okay. So let's talk a little bit. Okay. So there's, of course, just buying IBIT itself. And again, I do have a position. There's just buying Ethereum itself. But now, you have things like Circle that came out to huge move after its IPO, been consolidating here. This is, again, blockchains, financial applications. You've got BLSH, another recent IPO, digital asset platform, FIGR. I do have a position in this, Figure Tech. This is using digital assets for lending. So, where do you kind of go to take advantage of this adoption of the digital assets?
You just pointed right to two of them I love. My hedge fund was lucky enough to get hooked up with Dan Tapiero, and he gave me a large secondary offering of Figure and Circle in the private placement market. So, I'm just overjoyed with this. And this is just going to, the Tether, I think, is looking to raise or go public, or they think they're worth like $60 billion or something. The adoption of stablecoins is probably the fastest growing megatrend in the world right now. It's overshadowed by AI, but the adoption numbers, when I go through the portfolio of my hedge fund, I look at the metrics of these companies, it's ramping. It's completely overshadowed. But by the way, searches for Bitcoin as it makes an all-time new high is way off the highs. It's way down. The public is just not, they've not woken up to it yet. We're a long way from frenzy in Bitcoin.
Yeah. Okay. So stable coins, what's the play here? How do we participate in this?
I would wait till Circle has a better base. I think Ethereum is actionable right here. I would like a little, I know I'm cranky and old. I'd like a little digestion up here around 36.
Yeah.
And then I would like it to go. But these protocols are wilder animals than your normal stock. And they tend, when they go, to have way outsized moves. Now, the market's matured greatly. When I started, O'Neill analysts would come into my office and they'd talk to me. You know who I'm talking about. And I'd say, hey, what do you think of Bitcoin? And they just kind of look at me like, whatever. And no one covered crypto at all. And then over the weekend, Morgan Stanley Strategy Committee came out and said everyone should have 2 to 4% of their net worth in crypto. Okay, I opened my hedge fund 7 or 8 years ago. I was looking at like 25% of my net worth back then.
Your crypto hedge fund?
Yeah. I'm like, where are these guys?
Just to be clear, because you have a few different hedge funds, but you have one that is specifically crypto, and that's the one you're talking about that you opened up 8 years ago.
Yes. Yeah. And if you looked at the metrics of adoption, whether it was wallet addresses, usage, stable coins, DeFi, just no matter what you use to count, build out on blockchain, different blockchains, it was going like this, and it still is.
Yeah.
So the play, I think Bitcoin is actionable today.
Right. Ethereum, as you said, you'd rather have a little digestion, but how picky are you going to be about that?
I wish this would have digested at 70, but it just seems like there is a possibility this might not do that.
Mm-hmm.
Cup
Yeah.
without a handle.
Right. Yeah, sometimes you wait for the pullbacks, you wait for the digestions, they never happen, and then you're looking at it up 20, 25%, 50%. Oh, now what do I do?
Reddit's
um,
first move, Reddit's first move off the bottom looked to me like a cup without a handle. And I'm so crusty. I said I'm not going to buy it because it didn't.
mm,
It did have some semblance of a handle down there, but
mhm,
cups without handles are lower probability. But the wall of blue volume there was stunning.
right.
I mean, that's really 5 weeks up in a row, and then anything over that is just it's a buy signal.
Yeah, especially when you can when you can actually see it in the average volume line, when you can see it kind of going up, and I mean, how much of that was blue versus this one red week? And yeah, that's certainly
It's like
that certainly
18
sticks
weeks
out.
in a row with one down week in there.
Yeah,
So
yeah,
I
so
don't. I
pretty
didn't
crazy.
count. I'm just up here guessing.
Hmm. Another, I guess, concern that people have is the speculative stocks, because you talked about, hey, look, Bill, and look, I remember, back in the 90's, you had so much speculative stocks, so many things without earnings, and again, they were just saying, don't worry, we got eyeballs. Who cares about earnings? But what was Bill buying? He was buying AOL. It had earnings. He was buying Yahoo. It had earnings. Even Facebook, when Facebook came out, nobody around the office wanted to touch it until a year and a half after its IPO. And then there was that one quarter where it's like, oh, you figured out how to monetize this and make money off of it. And so, this was the quarter it
Mobile.
was off to the races. Yeah, because mobile advertising, and this is how we're going to make money off of this. So there are a number of these companies. I mean, you've got the nuclear space. Um, what was the one that was moving today? Nano nuclear energy, no earnings, no revenue, and this is just up 20%. So there are these themes that are kind of, again, AI adjacent, because as you mentioned, everyone wants to switch over to the GPUs. The reason is because of the you know many times computing power that they have in order to do these AI calculations. They run hotter, they need more energy. Nuclear is a way to do that. So of course you have a lot of these nuclear and uranium stocks going crazy, but they don't have earnings. So do you just again say, hey, I'm going to pass on these? I'm going to be a little bit more of a stickler, or or do you look for the ones that do have something to go off of?
I'm all okay. First of all, everybody needs to own an energy name.
Mm,
You have to. There's no possible way that I see, even with the profit incentive, that the energy will be there to meet the demand. So
right.
energy is going to have to go up in price. But look at Bloom Energy. Look at GEV.
Hmm.
Um, now this had a downside reversal today. Volume was light, but again, this is late here. All right.
Yeah.
And by the way, I was wrong about this. Last time you and I talked, I said there's a 40%, 20% of the shares are short. They are. But what I learned from a subscriber who now informed me that there's a convertible note that ARBs have hedged out with. So that short position, the convertible note is in the money. They're going to get shares. So they're going to pair it off. So that what's really what I like is the stock was acting like it was a short squeeze and there wasn't
Hmm.
one. So this
Hmm.
was natural buying.
Yeah,
Um,
that's crazy.
I mean, GEV looks great. I mean, the demand for gas turbines,
Hmm.
power at the source. This is starting to look a little bit like Spotify. It hasn't lit it up, but it also looks like Microsoft, where it's hugging the 50 and it's just base building. Although
Hmm.
Microsoft has now moved out, everyone's got to have an energy name, but you have to own it out of a proper base. This is not a moment to just. It's never a moment to buy anything extended.
Right. VRT recently came out of a base, Vertiv Holdings. This again, there are these stocks out there that have the earnings, that have the revenue. This has an EPS rating of 98, and this just broke out of a very nice cup with handle, 23% depth, 12% handle, and RS line already, back at highs on the breakout. So they're out there, right?
It's a 98 comp rating stock, trades 7 million. I don't know, it trades, what's the average daily volume?
Average daily volume 7.4 million.
At $155 a share.
Yeah.
This is a real company. It's not an idea. It has earnings. This is the kind of thing that Bill would look at, although I think he would be looking at a little higher octane. This was in the Roppel Report week after week after week. And it's a great name for somebody like an ANET. It's not the high octane of a Credo or an A-Lab, which are all, really high quality names. They're a little more violent. But this is ANET and VRT are kind of like the happy medium, where you're not going to have a triple or a quadruple in the next, 18 months, but you're also not going to get rattled. You most likely will have a smoother ride.
Yeah. I mean, just, since you brought up Astera Labs, I do still have a position in this. I was trimming it a little bit here last week, but yeah, I was buying some of those shares back today. But I mean, that was a 20% correction as it came down to the 10-week moving average line.
The first time.
Yeah, for the first time. So
again,
the first time you got to buy it. Second time, sometimes the second time you can still buy it. The third or fourth, that's where you have to be careful. But yeah, this is the first time too. It's 10-week moving average line and a very strong bounce. I mean, it was up 10% off its highs today, but still up 10%. Nothing to sneeze at.
Triple-digit sales, triple-digit earnings, last 4 quarters.
Yeah. Yeah, definitely.
Insider
definitely
zone,
those up.
13%.
Yep, right
The
there.
zone, 13%.
ROE 33%. Yeah, there's just a lot of very strong numbers here. Up down volume 1.2. As you said, you just kind of go through the list, and there's just a lot to like about it. Let's talk a little bit about international. I mean, like a VXUS, for instance, that's the total international. So this is ex-US. This certainly seemed like it was getting a little bit stronger. A lot of people looking at, China, whether it's KWeb. I noticed in your Roppel report, you mentioned Vietnam. This was actually something I had early on. And then I was just like, hey, I'm switching back over to the US, but I got a nice move out of this. But gosh, that looked like a strong move today. So your report was right on the money there. Are you looking at any of these international areas for a way to kind of diversify, or is it just why go elsewhere when the US is offering so much right now?
I think a lot of it I put in the Roppel report to show the general health of the global markets, to see, do we have wind in our sails?
Yeah.
And we clearly, first of all, Vietnam is the new China.
Mm-hmm.
Okay, it's the workshop of the world that Trump likes. So there's a lot of offshoring into Vietnam, but China has defied the odds, and it has come on, and it looks very, very healthy. Despite all of the human rights violations and all the really bad dogs run on the show, they are important to the world and to the deflationary narrative. And there are a lot of China names that look really, really good. I mean, like extremely good.
Mm-hmm. Yeah, a lot of attention on Alibaba lately.
So you have my playbook. You have my playbook.
Right. Yeah. Well, and this is the stuff we're also talking about on IBD Live all the time. I mean, let's back up, because Scott St. Clair on IBD Live, I mean, he's been talking about, China has been in this bear market, this horrible bear market, and it looks like it's coming out of it. And so you got to look at, okay, well, what's moving the needle here? And Alibaba just really sticks out in that regard.
Because of their AI initiative. And if you look at the SSE, which is the largest index in Asia, in China,
Mm-hmm.
it's beautiful.
I usually pull up that FXI.
FXI is good, but the SSE looks way better. And it's in a giant Darvis box right now.
Is there a ticker for that?
You'd have to go to.
Yeah, I'd have to go elsewhere. So, but yeah, that's okay. I mean, you get the idea that China, again, you look at that monthly chart and it's, yeah, just definitely on the way back.
It's broken.
It
It's
seems.
down. The intermediate trend is clearly up.
Yeah. Another area I wanted to kind of talk to you about is aerospace defense. ITA is the aerospace defense ETF. I mean, this has been one of the strongest areas. You've got, I mean, lately it seems like it's all about the drone makers. So Kratos Defense, AVAV just recently came out of a base. Are there any ways to play this? Because again, the earnings growth is spotty. I mean, AVAV does have some significant revenue growth here the last couple quarters, but is this something that you've been doing anything with?
I have to be super transparent. I basically passed on these names. I didn't like their lower market cap. I didn't like their lack of profitability, but I already had a massive position in Palantir, whose largest customer is the DoD.
Yeah.
With monster sales and earnings, a product that drones, everybody can understand, but and the CEOs matter a lot. And Alex Karp is a legend. He is one of the best CEOs. He's not Elon Musk, but he is an A+ player. And Palantir has everything I'm looking for. But look, Russia's aggression is going to have to be checked. They're unstoppable. It's an existential time for them. They have to push their borders back to USSR times, and they are running out of. Their demographics are so ugly. They have to prosecute this war now. And so I see defense spending continuing. It's a big theme, but Palantir has the horsepower of AI on top of the defense, and its selectivity. I mean, I'm always going to go for the liquid leader if I can get ceteris paribus equal earnings horsepower or better with a known leader.
Yeah, no, absolutely. Another area I want to make sure we touch on, XBI, let me try that again. XBI, Biotech. Wow, this has just really come on strong. I mean, you look at the weekly chart here, whether you're looking at XLV, that's been just kind of down in the doldrums, but XBI, and look, XBI, I mean, there's a lot of stocks in here, but you are definitely seeing a lot of movement in the biotech area. And this is another one of those areas where you do get a lot of speculative stocks, ones without earnings, ones without, without revenue, even besides like milestone payments. So how do you distinguish the good from the great from the, oh, this is just way too wild and I can't do it?
Okay, so I hate overhead supply, but I love biotech. My family's been involved in biotech since I was a little kid, and I was not with Bill, but Amgen, when Amgen came out right when I started in the business, and they invented Epogen and then Neupogen, a red blood cell replenisher and then a white blood cell replenisher. So if you had AIDS, you could take, it would basically save your life. Look at INCY. I don't like overhead, but I love biotech. This is a profitable biotech, which has a blockbuster new drug. Look at the handle and look at the tight action around 70. This sector, because you looked at XBI. XBI is in a beautiful pattern. XBI now has a prior uptrend. Insight has a brand new drug that is a monster. I wrote it. See, I literally just opened up the Roppel Report to get my biotech sector out. You don't have to sacrifice on earnings. There are others. I mean, this is actionable, just a touch bit higher. Also, stay with me. I'm scrolling. ALNY could be some type of a flag. And again, you are not giving up. Look, I'm sorry. What is the estimate for next year?
6,512%.
Followed up by next year?
376. So
is that like the S&P is growing about 7% a year?
Yeah.
Do you think they have anything new and different? Like, the N in Can Slim.
Yeah.
This is really, why would you buy some? Okay, let me back up. I think that the whole group is going to light up like Amgen lit up the whole group, but most of the names will never be profitable. They will never get a drug past the FDA. I was obliterated in a stock called Centocor, which was granted approval by the review committee, the FDA review committee, but the full board declined the drug, and it was for septicemia. And I learned basically 35 years ago that if you're not past the FDA and have sales and earnings, like remember alpha interferon, Interneuron Pharmaceutical, they had
Okay.
Fen.
Mm-hmm.
The stock went to Mars.
Oh, right. Yeah.
They found out 3 months later that it crushed your heart and your lungs, and it all was really bad. So just because you have FDA approval, you have to see how it does in the market for a while. This is a minefield. And I think it's great to buy an ETF like XBI if you want the unprofitable, super speculative names. But if you want the companies that have, you're really limited in, like Amgen carried the whole market when that bull market occurred. So there's a couple names that I really like.
Another area I want to touch on with you is in the retail space. Retail was one of Bill's favorites, just because, again, the American consumer is just not something to bet against. And retail didn't have a particularly good day today, but you have these areas, DoorDash. This is something we put on Swing Trader today. I have a position in this. I've actually had a position in this for a little while. And so, yeah, I've been trading around a position here, but nice reversal last week, strong move here today. Also, just on the AI theme, recent news out of ChatGPT being used for, doing shopping for you. So Etsy, they've got a partnership there. Shopify, where you can basically say, ChatGPT, buy stuff for me. I do have a position in Shopify. So what are you seeing in the retail space?
Can we go back to Dash?
Yeah.
Okay. When you go variable by variable, this has everything but one thing: margins. And when you take the driver out of the car and put R2D2 in there to drive the thing, their margins are going to explode.
Right.
Okay. Now, this also has the magic elixir that institutions crave, and that's massive earnings. Look, they're expected to earn 757% growth this year and then 60 next year. Those are sick numbers, but it's liquid. Okay. A hedge fund that's running $5 billion can take a position in this thing. The magic elixir between sky high earnings growth and liquidity is what institutions crave. And this had a beautiful breakout today. It has an amazing fundamental story. I was a little skeptical on the volume today. But it did have a pickup, and it's Monday. And Bill would say to me, Jim, if it doesn't quite have the volume you're looking for on the breakout, see what the weekly bar looks like. I think this was totally actionable today. Totally. This is a 98 comp name.
Right. 98 right there.
And the convenience economy. Totally. Nobody goes to pick up their ramen anymore.
Well, in that space also, Uber competing a little bit with Uber Eats. That also had a nice move. Now it seems like it feels like robotaxi news will sometimes clobber Uber every now and then. But what do you think of this here, right at 100?
I'm a believer in the market is way the hell smarter than me. And if I look at Lyft, now again, I didn't look at it today. If it got clocked, don't yell at me. But what do you see there?
Yeah, that's just tight as can be. I'm going to go to the weekly, and for all of these little flags that you've been talking about, that looks awfully flaggish.
Okay, so the market is telling me that it is blessing Lyft. Uber clearly, I'm looking for cum laude. All right. I'm not looking for the number 5 in the class. I'm looking for number 1. And Uber look, most people will probably never have a stock as good as Uber in their life, but selectivity. it's like in real estate, it's location, location, location. I'm not a trader. I'm an investor. I want to sit for 3 to 4 to 6 beat and raise quarters, and I want the elite. When Bill talked to me, he talked to me about 4 or 5 stocks. He did not have 75. And I just think Lyft is a much better, the market has blessed it by its price and volume action, and it's flat.
Yeah. Since we brought up robo-taxis, I'm going to bring up Tesla for you. This, of course, has been in the doldrums for a while. I mean, it just wasn't doing anything. The relative strength just not doing much. Much tighter base recently as it came back above its 200-day moving average line, and it's been taking off here. I do have a position in this. Last week, of course, the sales numbers came out. It was a little bit of a sell the news event, as people were like, okay, look, you had some good sales numbers because everybody was trying to get in ahead of the tax credit expiring. What's that going to do for your next next quarters? But it almost seems like the electric vehicle thing is secondary now. It's the robotaxi, robotics, all these different ideas that Elon Musk has. Is this something that is on your radar?
I just want to say every single stock we're discussing, assume I am long it and short it or hedged it. Okay. I own almost everything. I own a lot of the stocks we've talked about, and I do own Tesla. That shake was short-sighted people. That move, that breakout over 367 to 368 to 450, 60 was about the future. Okay. The numbers that came out yesterday and the day before, this stock is being accumulated to be held by institutions for years. And I think that that was a great shakeout. And I think that Elon is back at the helm. And I don't think the big move starts, though, until we get really over about 490. That's the beginning. And a lot of people laugh at me. They're like, well, you missed the whole move from 214 to 490. I'm like, yeah, well, take a look at Robinhood when it made an all-time new high. Okay, that was the beginning. If you go way back and you look at Charles Schwab when it made its all-time new high, Dash is right where you drew that line. Dash is at the exact same place right now.
Yeah, let's take a look at Dash. Yeah. Right there.
If you go, can you get just a little bit bigger chart?
Yeah, I'll zoom in. Or are you wanting me to go further back out?
Yeah, yes. I'm sorry, farther back.
Yeah, okay. I was going the wrong way.
Just hit monthly. Look at that. Okay. This thing looks just like Robinhood did a few months ago. And people are like, well, it's at an all-time new high. Look at that. That's where we are on Dash right at this minute. Yeah. I'll give you a simple story. I went to see Bill like in 1990, whatever. And there's a couple hundred people in a room, and Bill goes, who only buys stocks at an all-time new high? I'm sitting in the front row, and I raise my hand, and I look to my right, and there's like 1 or 2 guys, and I turn around and look at 40, 50 rows back, and I see like 6 hands are up in the air.
Yeah.
Everybody's afraid of the new high. How, I talked about the rolling AI build out and the different sectors within AI that are going to work at certain different times. How are you going to know if it's going to go, if a stock's going to go from 50 to 400, it absolutely has to be on the new high list all the way up. It's unavoidable. The gold bar list is the new high list, and the all-time new high list is the double gold bar. That's the golden goose bar list.
Yeah. Well, speaking of, okay, we were talking about Tesla a little bit, and so again, getting back to your point, you're okay saying, yeah, I'm gonna wait for it to get to new highs, because look at what happens. After they make the new highs, they can go a heck of a lot further. Just like Robinhood did, and I do have a position in Robinhood. So let's talk a little bit about some of the metals. I mean, XME, in addition to the gold, there are some of the rare earths. So we've got like MP materials, which hasn't been easy here lately. But this is another one that, gosh, it's just really looking set up nicely. You've had what was that just skyrocketed the other day? LAC, on the lithium space. You've got just a lot of these rare earths that are doing very well. Is this something that you're playing at all, or is again the speculative nature kind of making you shy away?
Generally, I really struggle with metal commodities outside of the gold. I've been in that for a long time, but
Right.
you have when the government puts their finger on the scale,
Hmm.
the current administration wants America to be the semiconductor capital of the world, and they want us to be a rare earth secure country. And they took a big stake in this. The U.S. government has blessed it. And normally, I would probably stay away from something like this, but I had one of the better trades I ever had in my life. One of the 6 or 7 big ones was Alibaba, and it's when the government said we're going to ban Google. You have to go to Baba, and
What was it, Baba or Baidu?
Baidu. Sorry.
Yeah.
Old timers.
I'm with you. I knew what you meant.
Now, this thing had a brutal shakeout about 7 or 8 days ago, which I got caught up in. I was, I screw up all the time, and I was impulsive, and I didn't wait for a mature handle. And now okay.
So I'm going to go back to this is the era in which China was saying, hey, Google, and it was so funny because if you looked at the Baidu website back then, it was basically, they used the same colors as Google. It was such a Google knockoff, and phenomenal move here. But yeah, go ahead and back to your point, Jim.
So right there in 08, at the end of the bear market, it had 5 weeks in a row up. And I took the biggest position I'd ever had in my life.
Mm-hmm.
And, Fidelity was gobbling it up. The government in China was redirecting all queries to Google, to Baidu, triple-digit sales and earnings. And I looked at how many people were online in China, and it was something like, I don't know, 50 million. And they were
percentage-wise, it was nothing.
They were adding 30,000 people a day to the internet.
Yeah.
And I'm like, oh my God, the total addressable market is unbelievable. And the government is now basically saying you can only use Baidu. And it went to Pluto. I made, my hedge fund made 30 mil on that stock. That was the first killing I ever had. And it's just perfect.
Mm-hmm.
Perfect.
Yeah. So to your point, looking at it again, MP.
Wait, go back to Baidu, please.
Okay, sure.
So what did Baidu? It went from 10 to 300.
Mm-hmm.
So if that's what a normal TML does, why would you go, well, XYZ's since April, it's up 200%. If you understand the history of TMLs and what they're capable of. Now, again, this was the elite leader at the moment. There were a few others, but this was one of the cum laude. When you're dealing in top quality merchandise, why would you be shocked when they do go up 3 and 4 and 500? Next time I come on, I'm bringing the stats.
Okay. Well, hey, you bring a lot of information every time, so it's always appreciated. And again, I guess one of the things that gives you your conviction in this is that you've done the studies. Right. And so the difference between having the number 1 stock in the group versus the number 2 stock. And that difference is big. You've got the studies that kind of help you say, okay, yes, number 2 is great, but number 1 is just so much better. Why do I even want to bother with number 2?
I did do the study, and I proved through the numbers that is correct. But I'll tell you something. This is really important. It's a quote I read, and it said, education is really thin stuff without experience. And what changes the game is I was a loser in the market for 4 or 5 years. My wife's like, please stop. Quit being a retail broker. She's like, look at our tax returns. As I started to cut my losses and I started to have some successes and build out, and initially my gains were small because it was so much money to me. I would not wait for a giant move. But as I started to catch some bigger moves over decades, I started to really believe in the system and the method. Experience is thin stuff without experience. Experience builds legitimate confidence. And so when you go from like lower middle class to making serious money, of course it fills you up with confidence. But studies are great, but until you implement them and you do well, that's really the game changer.
Yeah. And again, I'm going to go back to one of the points you made, almost at the beginning of the show. You are wrong all the time. You go in with the expectation that you're going to be wrong because you're wrong all the time, but you cut your losses. So, the losses are so small. All you need is one big winner and it wipes out so many losses, as long as you keep them small. That's just the way the math works.
100%. When I was a loser, I didn't have good risk management. I didn't even know what it was. Mm-hmm. As soon as I started cutting back then it was just 7%. My performance immediately changed. And then I started to employ selection criteria. I started to really understand what the template was. And that was the turbocharger. Now, back to what you said, my default in a normal market is everything I buy, I'm going to lose on because I'm wrong. 6.5 to 7 historically out of 10. Mm-hmm. So your default, I'm going to lose money. Mm-hmm. And when you expect to lose money, you cut your losses quicker. And your first loss is always your best loss. But the real, for people who lack the discipline to cut at 357, the 50-day moving average is the single guardrail that keeps you from going over the cliff. Mm-hmm. Names living below the 50, not by 2 or 3 or 4 or 5%, like Palantir held it really well. Microsoft is holding it really well. You break the 50 in a meaningful way on a Friday close by say 5% or more, the guardrail's broken. You're out. And so as bullish as I am, I guarantee as the artificial intelligence build out occurs, we're going to have real bear markets, not pullbacks to the 50. We're going to have markets that are going to break below the 200 and they're going to last for 9 months or 18 months along this massive path we're headed on. And if you're not cutting your losses and acknowledging the guardrail, you're going to miss the biggest opportunity of your life.
Mm-hmm. Now, well, I just want to make sure we also understand that there is this difference between cutting losses, and again, that's when you're kind of entering into something. But for some of these where maybe you have a lot of gains on, this is where, again, in the Roppel report, you were talking a lot about your hedging right now because you're trying to reduce your drawdown to a certain point. You don't want to give it all away, but you also don't want to lose a seasoned position that, and pay taxes on it instead of, if I just hedge this, kind of get through this pullback, then I can still retain my position and take the hedge off when appropriate.
Dude, you brought up something that I think is maybe the most important thing that we didn't talk about. It's the last 13 weeks of the year. It's year end. Mm-hmm. There's a lot going on right now. It's about to explode. So many people have huge gains right now. And they're like, if I hold for 13 weeks, I don't pay taxes for 18 months. So there's going to be a lack of share sellers in these elite names. On top of that, anybody who's had a really good year, my biggest years occurred where I have a good base. I'm up 20, 30, 40, 50% in the first 3 quarters of the year. Or it's 2 quarters. Then we have a slowdown in Q3, and then we explode into year end. Earnings season is 2 weeks away. Mm-hmm. If we have a good earnings season, and I know a lot of money managers, the average money manager is well below the index. They're struggling. I know some people, the world's so odd. A lot of Roppel Report subscribers and retail investors are up 50 and 100%. Mm-hmm. And a lot of institutional guys are really struggling. Now, if we have a good earnings season and their bonus is on the line and there's no shares for sale and these institutions come in to chase, what's going to happen? The market is going to go. And this is a rare moment where we've got an AI explosion. Managers are underperforming. The public there's cash up the butt on the sidelines. I mean, this can end up in some kind of frenzy. It's not unthinkable that we have a frenzy into New Year's Eve. The Fed is cutting rates into an all-time high. That's only happened, I think, 3 times in history, and the odds are fantastic. I mean, ugh.
Yeah.
I think we're looking at a possibility for massive price appreciation. And guess what? If I'm wrong and the market starts to break the 50-day, I will go chill.
Mm-hmm.
I could be wrong, but I just think that the combination of fund managers trailing, lack of shares for sale because people are going to want to push the taxes, money market on the sidelines, innovation, flag poles all over the place.
Mm-hmm.
But I also said, I do think we're going to see the indexes touch the 50-day or below or once before the year's out.
Mm-hmm.
So there's a little for everybody.
Well, and I also want to point out something that you brought up is, for those that have been doing well, and are looking at potentially some gains of 20, 30, let's say 40%, the way the math works is, if you get an extra 10%, you're up 40% for the year. You've done good. If you get an extra 10% for the rest of the year, that doesn't put you up to 50% gain. It like puts you up to 100, like a 55% gain. The way the compounding works, so it can really turn a great year into a phenomenal year with just a little extra more to end the year, and that's pretty exciting.
I want to throw one thing on it. When I was building my war chest, I learned that when I had life-changing money, like level up, like first class to private jet or bicycle to car or whatever it is, you have to take it, or at least take part of it. Because then it becomes too dear. The money's too important to you, and you will psychologically disconnect. You'll screw it up. I screwed it up, man. I screwed it up. That's how I ended up doing this. When you have a gain that's so big, it's literally a life changer. Like, hey, I was renting a house and now I made enough money to put my 3 kids through college. You've got to take that, because you can't think straight when that balance is so big.
My kid's college is on the line.
Well, what if you had no money? Okay,
Yeah.
let's just say that you're a lower income earner and you have 3 kids and it's going to be $200,000 a piece, and somehow you manage to take your $50,000 life savings and you're in a couple good stocks like A Lab or BE or whatever, and now you're up $200,000 or $300,000. You have to realize that. Okay, you can't deny your kids that college education. How about this? It's not October. In Bitcoin world, it's Uptober. The average gain in October is 19.9%, 91% win rate. And the government shutdown is only accelerating this process. With the adoption of Morgan Stanley saying everybody needs 2 to 4% in crypto. Yeah. So we could see a frenzy here.
Yeah, absolutely. Well, hey, I think that's a good note to end on. If people don't get excited about those prospects, I don't know what'll excite you. But also as a reminder, you also said, look, we could be in for some drawdowns, some give back, some pullbacks, and you have to have those guardrails in. You have to do some of that, hedging if that's your style. Or for me, I end up, I do all my trading in a Roth, and tax advantaged accounts. So I'll sell it and I'll buy it back, because guess what? Taxes don't matter. I'm not facing those decisions. So whatever your situation is, make sure you do have your risk management in place. Whether it's, again, protecting your capital or protecting your profits, because that's important to do as well. So, Jim, thank you so much. I could do this forever, dude. Chatting with you is just awesome. So I really appreciate you taking the time. And one more time, for folks that are interested in your Roppel Report, where can they get that information?
RoppelReport.com. Use the subscription code IBD for 20% off on the bundle. Every Wednesday night, I take all your questions until they're answered. I give out the report on Sunday. There's almost every stock that's worth discussing in there. But I have to say this. The golden goose of capitalism is absolutely real. Bill would start off every presentation I went to, and I saw him I might have saw Bill 60 times.
Yeah.
He would start off about 5 minutes about American exceptionalism. And there's a big part about that in last Sunday's Roppel Report. The world is a one-way street coming to America. People are risking their lives to come here. They're not doing that in any other part of the world because of the opportunity, because of the innovation, the jobs. And these founders are going to cook up some test tubes and some gene splicing and some software in the garage, and they're going to realize they've got gold, and they're going to go public. And it's going to have perfect sales, perfect earnings, perfect chart cup and handle, and it's going to break out and go up thousands of percent like Amgen or Microsoft or whatever. And it's never going to stop unless capitalism is suffocated by socialism. And the golden goose has got to have Kevlar on his abdomen right now because he's being shot at by all these nuts out there. Don't ever think that if you screw it up, that it's over. It's never over as long as capitalism is in place to gentrify and give you these new IPOs. So anyway, thanks for the time, dude. I loved talking to you. I love
absolutely. And I also want to let people know at Uptickin is your X handle. You put a lot of great stuff out there on X, so really appreciate that too. You're just doing a great job educating folks, and really, again, trying to help other people level up as you have. So appreciate all that you do for the audience. Okay, that's going to wrap it up for us this week, or I guess I should say month. Thank you so much for joining us. We will be back. Typically, we do the first Monday of the month. So I think, if I'm not mistaken, that's going to be November 3rd. We'll hammer that out and get Jim back on and see how this earnings season is starting to ramp up. It'll just be right in the thick of the earnings season when we have him on next. So hope you tune in for that. We'll see you next time. Take care, everybody.